right, ladies and gentlemen, those were the headlines, and let's take a look at a big story today on the show. Well, big moves today seen in India's furniture rental space. Furlenco has just recently raised 125 crore rupees as the company is gearing up for a long-anticipated IPO. Now, this isn't just another funding announcement. What makes this particularly interesting is the timing. Now, Furlenco has only recently swung back into profitability, and this fresh capital, led by Sheela Foam, which are the makers of Sleepwell, this signals a very deliberate push towards expansion, offline stores, and an omni-channel presence. So the question that we are asking on the show tonight: what is the strategic thinking behind raising 125 crore rupees right before going public? Is it about scaling faster, strengthening the balance sheet, or simply catching a favorable IPO window? And secondly, where exactly is the money going? Well, to answer all of those questions, I'm now joined by Ajit Moham Karimpana. He is the founder and CEO of Furlenco. Thank you very much, Ajit, for taking the time out and speaking to us here on ET Now. My first question to you essentially is about the fundraise of 125 crore rupees. What's the strategic thinking behind raising that money, and where exactly is this money going?
Thank you, Smita, for having me on the show. 125 crores essentially is only towards buying more assets. As you know, this is a rental company, which is basically we rent out our assets, which is nothing but our furniture. So this is nothing but to buy more of those furniture, which basically means it's for growth. Otherwise, we are a cash generating business right now. We are profitable. We are a cash flow positive company. We, in fact, generate cash after paying our debt as well. So we practically don't need any money for growing our business per se. But because it's an asset company, we continue to need to buy furniture. So we do need this money to get us to IPO stages.
Right, and that's essentially what I was trying to ask you about, whether it's about scaling faster, strengthening the balance sheet, or simply catching a favorable IPO window. Of course, you want to venture on to the Dalal Street. What are the timelines that you're essentially working with, and what are some of the milestones that you hope to achieve before you hit the D Street?
Sure. Well, we would like to get to about 90 to 100 crores in profitability before we hit the street. We think that that is a more balanced approach for the market. We believe that we should be able to get there, if not in 1 year, at least in 2 years, we should be there. So FY27 would probably be the right timeline for filing. I see that you're putting it as 26, but I would say it's more like 27, which is the more appropriate timeline and ready for the bigger market. As such, we are in no hurry. We want to ensure that the balance sheet is appropriate for the market. It is safe for the public, and we understand the responsibility of having public money on our cap table. So we would like to be as safe as possible, and that is, according to me, 100 crore PAT. In our business, that roughly translates about 150 crores in EBITDA, and roughly more than that in cash itself. There is a depreciation line item which adds to the cash. 100 crore PAT basically means an extremely high positive cash company out there. So that's probably the benchmark that I would use to get to the D streets.
Absolutely. In fact, Ajit, let me also talk to you about financials a bit, because Furlenco has moved on from a significant loss to a small profit this year. So what really changed? Was it better asset utilization? Was it also about smart pricing, lower churn, and more importantly, can that profitability be sustained as you scale?
Absolutely. Very good question. No, it is not one silver bullet, Sumita. It is a series of things that we did, starting with Sheela Foam's investment in our company, which we used to pare down a good chunk of our debt. Bringing down the debt basically meant that the money stayed in the system, and money stayed in the system. We used that money to put back into investments in the company. For example, we started a manufacturing plant, which is now churning out furniture for all our needs. That is the first investment that we made. We enhanced our warehouse facilities, brought in newer machines for a refurbishment, expanded our our team itself. And finally, the biggest investment went into technology itself, getting our routing algorithms right, getting our supply chain right, so on and so forth. So it was not any one thing that led to profitability. It was a series of things. And of course, what you're looking at is last year's performance. As we speak, this year we will close at roughly about 350 to 370 crores in revenue, with roughly about 10% profit margins. So we are much ahead of the numbers that you're looking at.
All right. But Ajit, help us also understand the kind of plans that you have as far as scaling up the company is concerned. How much more geographically that you're looking into expanding? Which are these geographies that you are focused? You are a rental platform. Where are most of your bookings essentially coming from? If you could give us a breakdown of those numbers as well.
Sure, sure. So, yes, majority of our rental sales comes from the major four tier one cities. We're talking about Delhi, Mumbai, Bangalore, Hyderabad, so on and so forth. But surprisingly enough, the tier two and the tier three cities, we're talking about Indore, the Lucknow, the Coimbatore, the Jaipurs of the world, they are growing at about 100% month on month, sorry, 100% year on year at this point of time. So we're very, very bullish on the tier two, tier three cities as well. Basically, what this is telling us is that this is not about a migratory mindset. It is more about anybody living in a rental home would want to rent furniture. It's is what we believe. So this is not only going to be a tier one phenomena, it is also going to be a tier two and tier three phenomena as well. So in terms of expansion, you would see more expansion in the tier two, tier three side, already present in 29 cities as we speak. We've already laid down our flag in all of those cities. Maybe we'll grow another two, three cities more. We don't plan to expand ferociously in all the cities. We plan to double down on these cities, grow those cities. It's doing a little bit more of the boring job until IPO so that we can reap the benefits of these cities and then think of slow expansion. So, not width, but more depth is what we're looking at.
Right. So essentially, depth is what you would be looking at. But Ajit, if I were to ask you this question once again, which specific cities would you be focusing more on?
So we haven't gone to the northeast side, something we should think about, Guwahati and things like that. That's one side. We haven't expanded to, let's say, the places like Vishakhapatnam, it's in Orissa, Bhubaneswar. We have not gone to, so the eastern side of India has not been explored much. So we will start expanding in those cities per.
Right, but let me also ask you about competition, which is, of course, heating up in this sector. There are also, of course, you have local brands also that are fighting for a customer share. Plus, there is, a tilt towards owning furniture rather than renting it. So, how will you ensure growth in this segment, and how will you ensure that Furlenco stands out amidst all the competition that we are seeing?
I would state it's actually the contrary, Sumita. Rental furniture is growing in double digits in terms of CAGR in the past 4 to 5 years, especially after COVID, rather than buying. What people are now realizing is that you don't need to be bound to a furniture, at least until the age of 35, or at least until the age when you buy your own house. As long as you're living in a rental homes, why do you want to be tied down to any kind of furniture? You can keep upgrading yourself to newer and newer furniture from us, or the rental furniture category, without having to take this furniture from one house to the next house. So on the contrary, rental is growing faster than buying. I'm not saying that buying is completely off the table, but definitely out of the furniture pie, the rental furniture pie is growing faster than the buying furniture pie, is what I would say.
All right. So you hold a different opinion, but let me also ask you about IPO. You did mention about, of course, hitting the IPO in FY27. But Ajit, what really excites you about India's D Street? There's been a lot of buzz as far as IPOs are concerned. We've seen a lot of new age companies hit the D Street. However, it doesn't go very well for all of them. It's only very few companies that have been able to sustain the pace as far as the Lal Street is concerned. So what really excites you about India's, D Street?
I'll tell you what some wise men in the D Street actually told me. Do not see the IPO as the destination. Look at it as a milestone and ensure that you set your eyes for more than, let's say if IPO is the next 2 years, set your goals for 5 years. Ensure that you deliver those numbers for the next 3 years beyond the IPO. Only then the IPO is actually a success. Otherwise, you would probably have a boom of something. You go high and then you'll probably nosedive in the coming quarter. So we don't want that. We see as IPO as a milestone. We will get there, but our outlook is more towards the next 5 years. We want to take this company to 1,000 crore revenue in the next 5 years or so. So that will give the real benefit to all our future shareholders as well.
Right. So when you talk about taking the company to 1,000 crore revenue milestone, where do you think that growth is going to come from?
I think just to give you an idea, Sumita, we are doing roughly about 20,000 houses at a gross level per month, which is nothing if you look at it from a market perspective. We did a dipstick survey, and this is just 1% of the market. There are roughly about 2 lakh homes that are getting shifted every month in India. We are just at about 20,000. So, we want to the growth is definitely going to be going deeper and deeper in India. We don't have to go anywhere outside to get to these kind of numbers. At least up to about 700, 800 crores, I don't see any problem. If you can get there, we should be able to get to 1,000 crores. Beyond 1,000 crores, we need to put our heads down and figure out how to grow beyond that.
Right. Ajit, let me also ask you, do you have any plans of going global, and can India deliver a world-class company in this segment that you're currently operating in? Because we keep hearing about, how Indian startup ecosystem is the third largest in the world. And of course, our policies, the government suggests that the policies are supporting entrepreneurs and more entrepreneurs to come up, not just in tier 1 cities, but tier 2 and 3 cities as well. But do you think, can India really deliver a world-class company that can serve global audiences?
A great question, Sumita. Surprisingly enough, rental furniture should not have been successful in a country like India. India is a buying country. India is a saving country. I have been asked numerous times in the past 10 years who would be actually renting furniture, but we actually did. So on the contrary, we haven't seen this model anywhere outside India. In fact, in the early days of my fundraising, everybody kept asking me, "Is there a parallel anywhere in the world?" Yes, there are some brick and mortar companies in the US which rents out furniture, but that's more like to the lower strata of the society, people who don't have the credit scores. It's for them, the rental furniture. But nowhere in the world are there rental furniture brands per se. So this is a great opportunity for this category and us to go global. But will we push hard immediately? No, as I said right at the beginning of the interview, this is an asset-heavy business. You can't grow indiscriminately. You need to grow at a very particular pace, ideally in a right debt equity ratio. So we are watching our balance sheet. We don't want to grow. We don't want to grow outsized. They say, right, you grow as much as you can and not beyond that. We don't want to grow too fast enough to die. So it is going to be slow and steady, and that's what is going to win the race.
All right, so slow and steady is essentially the path that you want to take, and you want to expand, but only meaningfully. For now, you're looking at specific geographies as far as the India market is concerned, and more importantly, the Northeast market. That is something that you will be open and keen on exploring. Well, on that note, thank you very much for joining us and taking the time out and speaking to us here on ET Now, Ajit. It was indeed a pleasure having you and getting your thoughts on India's rental furniture market.
Thank you, Sumita.